Today I'm going to show you a trading trick that I use and a reversal strategy as well, plus a setup on the business directory company Yelp Inc. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. My voice is still rough this morning. Apparently I'm recovering from the flu. I guess it could have been worse. Thanks for bearing with me on that. I've mentioned several times to you that we're coming up quickly on our training series about becoming a professional trader. This will be a free course and I'll be releasing the training videos on Wednesdays. Don't forget to comment below on what topics you'd like to see us cover. Today's trade pick is a weekly descending triangle on the business directory company Yelp Inc. We'll look at that shortly, but first I'll update you on the open trades. Then I'm going to show you a trading trick that I use, and then a reversal strategy. Then today's trading maxim. Happy almost weekend day. Remember to click the subscribe button and hit that bell so you don't miss any of my great trade tricks. Alright, let me show you the open trades. Spot gold is in this huge pullback today, right here, and just a few minutes ago it just popped down here and hit my stop loss that was at 1571.68, locking in 924 on the second half. So we're out of this at 924, and of course our target on the first half. Earlier I mentioned that I'd show you a classic reversal trade pattern, and this is it right here. I'll get to it shortly. But first, let's look at all the other open trades. This sly Euro Swissy popped right up here and hit our stop earlier this week. So we took a full loss on this one. Thankfully, it was only a half-size trade, so done with the Euro Swiss for right now. Aussie Canadian dollar is just banging back and forth here, going sideways. We got some profit on it. Now we're waiting for this parabolic SAR to come down here where we can start trailing stops on it. So Beyond Meat gapped way down to here this morning, dropping like a rock on these disappointing earnings right here. The surprise was minus 2 cents. As you know, it takes a surprise because everything that's already known about a market is already built into the price. So it takes a surprise like this when earnings come out to cause the market to gap down or gap up like it does sometimes. So I did not enter this, and I don't recommend that you do either. Here's a free hack for you. Typically when there's a gap like this down or up, the market wants to retrace and fill that gap before proceeding in whatever direction it's going to go, and it could go either way from there. So that doesn't always happen, but it is a high probability thing, and so you have to be careful of that. So I'm done with Beyond Meat for right now. The US dollar Japanese yen is pushing hard down below the bear flag right now, so this could be a trigger today. Lots of volume in this move down. You can see the whole move down actually. So watch it. If the close is much lower than this right here, I might put a sell limit up a little bit higher. Now this is the little trick that I was going to talk to you about. A big move like this is likely to retrace a bit before it proceeds on. So if you were to put a sell limit order in up here, the price has retraced a lot of this candle already since I started looking at this, but if you were to put a sell limit order up in here somewhere, then you would get a much better price, but you also risk that the price will continue on without you. So the trick that I suggest that you consider doing, and I have actual rules for this as well, as usual, and that is, let's say this candle closed way down here. The ATR is currently 76 pips. So if we were to measure 76 pips down below the bear flag here, that would be right here around 108.18. So I would place a half-size sell limit order right about the 108 level here, and then I would place my market order, my market sell order, down here at whatever the close is, and that would also be a half-size position. So if it doesn't retrace, then you're not missing out completely, but if it does retrace you're going to get a better price on half of your trade, and it'll be a lot lower risk trade position. You know what I mean? I understand that that may be a little complex for new traders, so just ignore it if it confuses you. If you've been to the rodeo a few times before, this may be a helpful idea for future reference. If you have any questions about this trick, drop them in the comments below and I'll get back to you on them. Okay, let's take a look at the gold chart again. Now, this is a pretty powerful reversal pattern, and I've used it a lot in the past. This is known as the 1, 2, 3 reversal pattern, and it consists essentially of a trend in. The trend in is necessary because this 1, 2, 3 will appear in trading ranges all the time, but you don't want to enter it as a 1, 2, 3 reversal. In a trading range, you'll just get eaten alive by doing that. So make sure that you have the incoming trend. Now this works upside or a downtrend into a 1, 2, 3 low, but we're going to look at this 1, 2, 3 high right here. So you get this incoming trend and it comes up here to your number 1 point. Okay? After that, it retraces back down to a number 2 point, somewhere below that number 1 point. Then it pops back up to a number 3 point right here. This is number 2. This is number 3. I'm so good at drawing with my mouse. Now the number 3 point must be below the number 1 point. If this is above the number 1 point, that negates the whole thing. That suggests a continuing trend. And then after hitting this number 3 point, it drops like so, and your entry is as soon as it breaks this number 2 point right here. You can place your stop above the number 1 point, but in my opinion, this whole trade setup is negated if price goes back up above the number 3. So I usually use that as a little bit closer stop so that I can use a little bit larger size when I do these trades. Now typically you would want to measure the distance between the number 2 and the number 1 and use that amount for your target. So in this case, that would have put the target down in here somewhere. If you have any questions about the 1, 2, 3 reversal, drop them in the comments below and I'll cover them for you. All right, let's take a look at today's setup on Yelp Inc. Here's a pretty big descending triangle on the weekly Yelp Inc. chart. Yelp is a business directory service and crowdsourced review forum that includes a website and a mobile app that allows you to review businesses that you have occasion to visit. A descending triangle consists of a strong support level like this one here at 30. You can see the frequent touches of this zone back here. Then a series of lower highs forming a downtrend that pressures the support level until it breaks. As always, I like to see declining volume and volatility during the course of these patterns. And here's the trade plan. We're going to sell a weekly close below the descending triangle or below 30. On the breaking candle, we want to see the volume bar reach up to the volume average to go with a full-size position. If it doesn't quite reach the average but does reach 3/4 of the average, then I will open a half-size position to reduce risk. You can calculate the percentage by dividing the volume here by the volume average. You should get 0.75. If you don't get 0.75, then stand aside on the trade. The stop loss will be 1.5 times the daily ATR, and the first target will be 1 times the daily ATR. So what that means is on the day this breaks, I should say on the Friday this breaks, and closes down here, you'll put your entry in just ahead of the close. You'll switch to a daily chart. You look at the ATR on the daily chart. You'll multiply that by 1.5 and you'll measure that amount behind the entry for your stop loss and 1 ATR below the entry for your first target. If after entering a trade we get a candle that closes back inside the triangle, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move the stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on Yelp Inc. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today's maxim? Tim's trading maxim number 38. Don't insist on being right. You may as well insist on being broke. With trading, you've got to check your ego at the door. This isn't about being right, because you know what? If you don't agree with the market, guess who's wrong? Our job is to go with the flow and react to the market fluidly, not to fight with it. I have a friend who would argue with a fence post. I respect that because there is definitely a place for that sort of staunchness. Trading is not that place. So let the market be right and move on. That's the only way to be successful at this. Remember our weekly Yelp trade plan here. We're going to sell a weekly candle close below the triangle or below 30. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. And sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your questions right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And please don't forget to let me know in the comments what you think about our series of videos on becoming a professional trader and what topics you would like to see us cover. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great Friday, and I'll see you next week.